Trendline is the most profitable trading tool in trading, that if traded properly, it's almost like making profits every day at will. But as profitable as it seems, only a few traders have utilized this tool, made profits with it, and turned it into a strategy. Of course, everyone can draw them on the chart and make it look like they are trading. But what really matters the most is what you are really looking out for when you draw them. I have seen a trader that has made $200,000 in a day just trading trend lines. Another wrote to me at a time that he made his first $30,000 in his trading career just trading trend line. And the most interesting thing about this is that they are all using this same strategy that I'm about to unveil to you in this video. As you watch this video, if at any point you have a question, feel free to drop them in the comment section, as I will be answering them all. As simple as I will make it look in this video, this is a very powerful trading strategy. It is a strategy that has never failed and guarantees you a 90% winning rate on any market you use it on. Be it Forex, crypto, stock, binary trading and more. Note that drawing trend lines on the chart as a normal tool is different from drawing the trend lines as a strategy and understanding the mysteries that surrounds this tool. You must have heard this popular quote in the world of trading: "The trend is your friend." The biggest advantage of the trend lines is that it gives you an edge on the new market trend. You trade it as a strategy and still understand the trend, which is your friend. Following the trend is very important, because trading against the trend is like standing in front of a moving train. It won't look good on your trading account, so you must learn to be on the train, the better side of the market. Your trading life is about to change for the better. Get prepared to start applying these strategies you are about to learn in your trading life and start making profits immediately. In this video you will learn 1. How to spot the right trend movement on the chart. Here you will learn how to spot the best trend movements on the chart and the points to consider before drawing them. It will help you avoid the mistakes of looking out for the wrong patterns. 2. How to draw the trend lines the correct way. Here you will learn how to perfectly draw the trend lines on the candlesticks, how to make sure you get the trend lines right to predict future price actions. 3. How to trade the trend line strategy. Here you will learn all you need to become a profitable trend lines trader. If you follow all the steps you will be taught in this video, this strategy will surprise you with the kind of results you will be seeing on your charts. I will be showing you the best area to place your stop loss and take profit targets in the market. 4. Live practical examples. You will see me trade these strategies live, so you can understand clearly how to trade them. Before you continue, I would like to make you understand that pro tips and information has been spread out in every part of this video. Each part of the video is as important as every other part of the video, so follow carefully so you don't miss out on all the crucial tips. 1. How to spot the right trend movement on the chart. Spotting the right trend lines movement is very easy. All you have to do is look for a movement with higher low for an uptrend, or a movement with lower high for a downtrend. At least that's what every normal trader know how to do. But what if I tell you there are more advanced ways to spot the right trend lines for your trades? Wondering why a market will form a trend line and all of a sudden fall out from the trend line, and traders will be thinking, it's a breakout already and will start placing their trades. But all of a sudden the price returns to the trend line and starts following the former trend. At that point, many traders around the globe have lost a lot of money on that trade, if you are watching this video now, you have successfully escaped that group. Definitely you have seen these things happen on the chart multiple times, and you wondering and confused on what is really happening in the market. Why is the price always going against me? This will sound funny, but some people actually think there is a spirit behind their trading account that always buy the trade immediately they sell it, or the other one that sells the trade each time they buy. Some think that their broker is monitoring their account and making sure they are losing all the time. All these are assumptions in your head, and I am here to tell you that there is nothing like that. We have all been there and had that experience. Here are what you must consider when spotting a good trendline movement on the chart. 1. You must make sure the line is not too vertical. It should form something like a slope movement. The more sloppy the movement, the better. It will be easier to trade. You need to master the slope movement to enjoy more clear and clean trendline on the chart. But that's not all. You must make sure there is a break of structure. For an uptrend expectation, the lower high must break the high of the first move, and for a downtrend expectation, the higher low must break the low of the first move. The break of structure indicates that the market is ready to move to the target direction and will make a great move when price turns to that spot. This is the confirmation we need to draw our trend line. But there is one more thing you must note. Never trade choppy markets. The first mistake you must avoid is trading choppy markets. These choppy markets have rendered a lot of traders poor. It has been the reason a lot of people have given up on trading. They are like the traps in trading. They can make strategies look like they are not working. You can identify them by observing the too many wiki movements on a particular area on the chart. They always cluster together, and there are no much spaces within their movement. Each time you see something like this on the chart, leave the asset and trade another one. And if you trade only one asset, like some traders do, close your charts and relax somewhere till the choppy storms are over. How to draw the trend lines the correct way. If you followed what we have just discussed, then drawing the trend lines will not be so hard for you. But there are some crucial things you must note when drawing the trend lines. After waiting for the break of structure, and the price finally broke the structure, then it's time to draw the trend line. You must note that trend lines are only drawn on the wicks of the candlesticks. The trend lines are never drawn on the body of the candlesticks. Everything must be drawn only on the wicks of the candlesticks. The trend lines can be adjusted on the wicks of the candlesticks, but it must never cross the body. Sometimes it's good to draw large and extended trend lines, but in this video I will teach you how to trade the moment. Expect to trade immediately and a lot of times. This is what gives birth to the larger moves of the trend. It's almost like the root of the trend, but we can also find it in strong trends retracement phases. If you know this, you can be able to find a trade today on your chart and start using this strategy immediately, because it's so simple to spot and trade. And that moves us to our next chapter. How to trade the trendline strategy. To trade the trend lines, you must wait for the market to return to the target movement. This is very important because some traders take the market when the market gets close to the trend line. But if you want to trade the trend lines the way the professional traders do, you must wait for an evident touch on the trend line. I say evident because the trend line must touch it clearly. It's either there is a touch or there is no touch on it. There are no two ways about it. After the market has touched the trend line, that's where the biggest challenge comes up. At this point a lot of traders get a shaky mind. Why? Because they don't know the best entry candle to look out for on the trend line. And that's where the issue comes up. Using every signal candlestick on the chart will only make you an inconsistent trader. There should be a candlestick that you must always look out for when the price approaches that point. And any time you don't see it, you leave the trade for the moment. The best candles to look out for on the trend line is a pin bar. The pin bar is the most powerful trend moving candle. The pin bar comes with a lot of information, showing the mindset of the traders at that point. The long decline to the target direction indicates that traders are interested in moving the trade to the target direction. While using the pin bar candlestick, if you are expecting a bullish movement, the candlestick will appear either as a bearish colored pin bar or bullish colored pin bar. They all push the same narrative. They are bullish and looks the same, but their color means different things. When it shows up as a bearish colored pin bar, you must wait for a bullish candle to confirm the movement. But when it appears as a bullish colored pin bar, take the trade immediately after seeing the candlestick, just like the bullish one that showed up on this trend line. If you are looking out for a bearish movement, we look out for a reverse pin bar, known as the bearish pin bars. It appears as the same structure, but still yet the color also matters. If it shows up as a bearish colored candle, you can take the trade immediately, but if it shows up as a bullish colored candle, then you must wait for a bearish candlestick to confirm the pin bar before trading the move. Now that we are ready to trade, where do we place our stop loss? Stop loss is placed a few pips below the pin bar, because after the pin bar appears, the market must not trade below it for an uptrend or trade above it for a downtrend. The take profit level is placed at the next significant high for an uptrend or the next significant low for a downtrend. That's all you have to do to make your trendline trade a success. Most times the market trades above the take profit target and moves more. You can also place your own target take profit by yourself as much as you want, as you manage your risk too. Now let's trade some live examples. This and many more you can achieve with this strategy. But you must practice and backtest them multiple times on your chart, so you can master them completely. It can be used on different time frames, but remember, the higher the time frame, the higher the risk. So choose the time frame that suits your portfolio. Determine the size of your position based on the level of risk you are willing to take. This is often expressed as a percentage of your trading capital. Avoid risking a significant portion of your capital on a single trade to protect against potential losses. High volatility or unexpected news events may warrant tighter risk controls. Understand how much of your trading capital you are comfortable risking on a particular position before taking the trade. Consider factors such as your financial goals, overall risk tolerance, and experience level. By following all the rules, strategy, and psychology you have received in this video, in a very short time you will begin to notice how profitable you will become as you follow them and practice them more. It will make you millions in the best time to come. In our next video, I will be explaining in depth on market structure top-down analysis. Subscribe to this channel right now so you don't miss out on it. If you need a Forex mentor that will personally mentor you one-on-one, check the description box below for a link into his Telegram channel. See you in our next video.